For years, you've been watching strategy videos. You have learned. You have demo traded, gone live, gotten the screen time, and done all the things the gurus said would make you a successful trader. Yet, after all these years, you continue to lose money. You continue to blow accounts. The success part of trading continues to elude you, to the point that doubt has crept into your mind. You now question your ability as a trader. Can I really make a living from trading? Or is it all just smoke and mirrors? You keep asking yourself, will I ever become successful with trading? Or is it all a scam I've had the misfortune of buying into? What if I tell you the secrets to ending your hard luck streak are revealed in this video? Stay till the end, and I promise you, you'll find out what you've been doing wrongly that has been holding you back from achieving trading success. Just like the popular saying from one popular guy whose name I don't remember, the biggest hindrance to our success is not the things we do not know, it's the things we know that just ain't so. And one of those things you've probably got wrong is thinking. Trading's just about staring at numbers and charts on a screen. You probably think that if you're smart enough to figure out the math, the charts, and the economic calendar, you'll have trading all figured out. But tell me, how's that been working out for you so far? You constantly neglect the fact that those numbers and charts are people with hopes and dreams, just like you. You constantly ignore the fact that those charts and numbers are your dentists, your neighbors, and friends that exchange currency when they travel abroad, just like you. Behind every line on those charts are traders across the globe, carrying their emotions, dreams, fears, and even their greed, all driving their hopes for the future. And those institutions that scare you so much are also made up of people like you, individuals with their own aspirations, worries, and humanity. At the core, those numbers and charts are nothing more than a reflection of our collective psychology and life experiences. The 5% of successful traders get this. They know trading is inseparable from the human experience. But the other 95%, they keep trying to split the human side from the data, convinced that being smart enough will somehow be enough. To show you this parallel between trading and the human experience, let me share with you the story of my two good friends, Scarlett and Pedro. The wedding bells had rung, the champagne had been poured, and the promises had been made. Scarlett and Pedro stood on the precipice of their new life together, gazing at each other with all the hope and love the world could muster. Marriage was their fairy tale, a storybook ending where love would conquer all and happiness would flow endlessly. But life had other plans. As the months passed, their marital bliss began to feel less like a fairy tale and more like an unpredictable forex trading floor, volatile, uncertain, and requiring a level of strategy they weren't prepared for. Scarlett had always been a planner. She approached marriage the same way she approached her career, with spreadsheets, timelines, and an unwavering belief that if you followed the steps, success was inevitable. Pedro, on the other hand, was more of a dreamer. His optimism carried them through tough days, but his lack of attention to detail often left Scarlett feeling like she was navigating the relationship alone. In the early days, they basked in the simplicity of small wins, shared laughter over takeout dinners, lazy Sunday mornings, and the comfort of knowing someone always had your back. But soon, just like a forex trader placing their first high-stakes trade, they encountered their first major loss. It started small. Pedro wanted to leave his stable job to pursue a passion project, a startup with no guarantee of income. Scarlett, ever the pragmatist, panicked. They'd just bought a house, taken on a mortgage, and started talking about kids. "Do you even understand the risk you're taking?" Scarlett snapped one evening, her voice shaking. "Do you even believe in me?" Pedro shot back, his optimism replaced by frustration. The air between them grew thick with tension. Just like a market hit by unexpected news, their relationship was rocked by volatility. But Scarlett thought she could fix it. She tried to manage their finances more tightly, control every detail of their lives, and push Pedro back toward a safer path. However, the more she tried to take control, the more resistance she faced. Pedro, feeling stifled, began spending longer hours away from home. He poured himself into his startup, leaving Scarlett to wonder if they were even on the same team anymore. It was a bitter realization. Marriage, like the market, didn't care about your plans. Just when Scarlett thought things couldn't get worse, they did. One evening, Pedro came home with an announcement. "I lost the investor funding." Scarlett froze. She felt the weight of their mortgage, bills, and savings drain from her chest like air from a punctured balloon. "We'll figure it out," he said, trying to sound reassuring. But the doubt in his voice betrayed him. The fight that followed was a hurricane of emotions: fear, anger, blame. They were no longer a team, but adversaries, each trying to outshout the other. That night, as Scarlett lay awake staring at the ceiling, she realized something. Their marriage was crumbling, not because they didn't love each other, but because they didn't understand how to navigate the volatility. The next morning, Scarlett sat Pedro down. "I don't know how we got here," she said softly, "but I don't want us to end up like this." "Neither do I," Pedro admitted. For the first time in months, they talked, really talked. They laid everything on the table: their fears, their frustrations, their unmet expectations. It wasn't easy. There were tears, apologies, and long silences as they tried to find their footing. It was then they realized their marriage was like trading. It required a strategy, risk management, and constant adaptation. They started small. Scarlett agreed to loosen her grip on control, trusting Pedro to find his way with his startup. In return, Pedro committed to being more present and realistic about their finances. They set stop losses for their arguments. If a disagreement got too heated, they'd pause and revisit it later with clearer heads. They also made a pact to celebrate the small wins, no matter how insignificant they seemed. When Pedro landed a small freelance contract, they toasted with cheap wine. When Scarlett got a promotion at work, they danced in the living room like they were kids again. With time, their relationship became less about controlling the outcomes and more about navigating the journey together. A year later, Scarlett and Pedro sat at their kitchen table, reviewing their budget. Pedro's startup had begun turning a modest profit, and they'd finally regained their financial stability. But that wasn't the real victory. The real win was the realization that marriage, like trading, wasn't about avoiding losses. It was about managing them, learning from them, and coming back stronger. "What if we'd given up?" Pedro asked, looking at Scarlett. "We'd have missed the payout," she said with a smile. And in that moment, they both understood. The value of their marriage wasn't in its perfection, but in their ability to adapt, evolve, and stick together through the volatility. Scarlett and Pedro's story illustrates that the forex market, just like a human experience like marriage, is unpredictable. The truth is most people don't really understand how forex trading works. Most people dive in, chasing the dream of instant wealth, without any preparation, like walking into a marriage. Instead of building knowledge and a strategy, they throw money at their broker, hoping for a quick win, and then blame the market when things fall apart. But as legendary trader Jesse Livermore once said, "Markets are never wrong. Opinions often are." The issue isn't the market or the institution of marriage in this case. It's your lack of understanding and the unrealistic expectations you bring to the table. Because for those willing to admit that the human experiences are inseparable from trading, and those willing to master this side of trading, willing to master the psychology, the emotions, adapt to the changing tides, and invest with care and patience, the rewards are immeasurable. Scarlett and Pedro didn't just survive the volatility. They thrived because of it. And just like trading, they learned the most valuable lesson of all, that the process is the true reward. Now let's further explore the powerful lessons that traders can draw from Scarlett and Pedro's marriage. Their struggles, their victories, and how their journey might just reveal why you're still among the 95% of traders who haven't cracked the code to trading success. Lesson 1. Your unrealistic expectations. When Scarlett and Pedro said their vows, they believed they were embarking on a journey where love alone would be enough to carry them through. They had no roadmap, no contingency plan, just the assumption that their feelings for each other would smooth over any challenge that came their way. In the early days, their optimism seemed justified. Their relationship felt effortless. Love made everything seem manageable. From deciding where to live to how they'd split household chores. But honeymoons do not last long. The story of Scarlett and Pedro mirrors the journey of many novice traders entering the forex market. These traders, much like many couples, start with stars in their eyes, believing they're about to embark on a life-changing adventure. And why wouldn't they? The internet is flooded with enticing promises. Flashy Instagram posts of traders lounging by infinity pools, claiming they made $10,000 before breakfast. YouTube ads from self-proclaimed gurus boasting about how they turned a $100 deposit into six figures in a few months. Testimonials of people quitting their 9-to-5 jobs to trade full-time and live the dream of financial freedom. Platforms showcasing sleek user interfaces, trading tools and phrases like "start earning in minutes" or "no experience required." It's an irresistible narrative. Forex trading painted as a goldmine where you can come, pick up as much as you want, and walk away rich. The barrier to entry seems laughably low. Sign up for an account, deposit some money, and you're a trader. This intoxicating imagery convinces many that wealth is just a few trades away. Fueled by these promises, most new traders dive in headfirst, just as Scarlett and Pedro entered marriage. But what many don't see in those Instagram posts or YouTube ads are the losses, sleepless nights, and emotional roller coasters lurking beneath the surface. They open their first account with visions of instant riches. Armed with minimal knowledge, they place large trades, chasing volatile markets and expecting exponential returns. For a while, it might even seem to work. Beginner's luck has a way of reeling people in. Trust me, it got me too. But then the market shows its true face. A sudden price reversal wipes out days or even weeks of gains. Overleveraged positions lead to devastating losses. The dream of financial freedom quickly turns into a nightmare of margin calls and frustration. The disappointment is crushing. The goldmine we imagined wasn't real. Just like Scarlett and Pedro discovering that love alone couldn't carry their marriage. The traders learn, painfully, that the market doesn't care about their dreams or the promises they believed. It's not a goldmine, it's a battlefield. And without preparation, discipline, and the right mindset, the market will take everything they put in and leave them with nothing but regret. Lesson 2. Your lack of emotional management. In their marriage, Scarlett and Pedro's personalities seemed complementary at first. Scarlett was a meticulous planner, the one who kept things grounded and orderly. Pedro was the dreamer, full of big ideas and the belief that everything would work out if they just kept moving forward. But as challenges arose, their individual strengths turned into stumbling blocks. Scarlett's need for control became a crutch. She micromanaged their decisions, fearful of making mistakes that might jeopardize their future. Meanwhile, Pedro's recklessness, his refusal to look before he leaped, created instability. Their clashing approaches turned into an emotional tug-of-war that threatened to unravel their relationship. These dynamics mirror the psychological traps traders face in the forex market. Just as Scarlett and Pedro's emotions drove their decisions, traders often find themselves at the mercy of fear and greed, the two emotions that dominate market psychology. The trap of fear. Fear in trading manifests in many ways, and just like Scarlett's constant worrying, it often leads to self-sabotage. Her fear of losing control made her overanalyze every decision Pedro made. She micromanaged their finances, questioned every move, and tried to steer their marriage toward her idea of stability. But her constant need to play it safe created resentment, suffocating their partnership. Imagine you just opened a position. The trade begins to move in your favor, and the profit grows. But instead of letting the trade reach its target, you panic. You think, what if the market reverses? I should lock in this profit before it's gone. Acting on this fear, you close the trade prematurely, only to watch the market soar to the original target. This fear of losing profits or being wrong can and has prevented you from your strategy to play out. Over time, these small, panicked decisions add up, cutting potential gains short and leaving you frustrated. The trap of greed. On the other side of the spectrum lies greed, the insatiable desire for more. Pedro's recklessness, his tendency to chase opportunities without thinking of the consequences, mirrors this emotional trap. In trading, greed often pushes us to take unnecessary risks. You might see a position moving in your favor and think, this is going great, why not double down? Or you might want to hold on to a winning trade far longer than planned, hoping for even bigger profits, only to watch it reverse and wipe out your gains. Greed also fuels revenge trading, the impulsive decision to place larger, riskier trades after a loss in an attempt to win it all back. These emotional decisions rarely end well, often leading to devastating losses. Lesson 3. Your lack of a solid plan and adaptation. For Scarlett and Pedro, their lack of a solid plan was painfully evident. When Pedro decided to leave his job for a risky startup, Scarlett's immediate reaction was panic. She tightened her control over their finances, trying to compensate for the uncertainty, which only fueled Pedro's frustration. Instead of tackling the problem as a team, they spiraled into reactive behaviors that drove them apart. Their turning point came when they realized they couldn't continue without a plan. They needed a framework to handle disagreements, a financial strategy that balanced risk and stability, and a shared vision for their future. Much like Scarlett and Pedro's marriage, trading without a clear plan is a recipe for disaster. Many enter the market armed only with optimism, thinking they'll adapt on the fly. But the market, like a volatile relationship, thrives on unpredictability. And without a plan, it's only a matter of time before the chaos overwhelms you. A successful trading plan has 3 key components. 1. Risk management. This is the backbone of any trading plan. Just as Scarlett and Pedro learned to allocate their finances wisely, traders must define how much of their account they're willing to risk on any single trade. Without proper risk management, one bad trade can wipe out weeks or months of progress. For example, a disciplined trader might risk only 1 to 2% of their account per trade. This ensures that even a string of losses won't cripple their account. An undisciplined trader, on the other hand, might risk 20 to 30% per trade, believing that a single big win will justify the risk. But when the market moves against them, the results are catastrophic. 2. Position sizing. Position sizing is the art of scaling trades based on the level of risk and account size. Just as Scarlett and Pedro learned to adjust their financial commitments to Pedro's startup, traders must adjust their position sizes to suit market conditions. For instance, during periods of high market volatility, a smaller position might be prudent to mitigate risk. Conversely, in stable conditions, a trader might feel comfortable scaling up slightly. Traders without position sizing often find themselves overexposed in volatile markets, much like a couple committing too much to one goal without a safety net. 3. Adaptability. Perhaps the most critical element of a trading plan is the ability to adapt. Markets are dynamic, and strategies that work today might fail tomorrow. Just as Scarlett and Pedro had to adapt their approach to meet the evolving challenges of their marriage, from financial strain to shifting emotional needs. For traders, adaptability might involve adjusting strategies to account for market conditions. Example is a trending versus ranging markets. Learning from past trades, what worked, what didn't, and why. Staying open to new techniques, tools, and perspectives while remaining grounded in proven principles. Adaptation and planning aren't just helpful, they're non-negotiable for success, whether in trading or in life. For me, forex trading has been a game changer. While I'm not exactly where I want to be financially just yet, it's definitely transformed my life in ways I couldn't have imagined. And the best part, I'm able to help a few others along this journey too. What about you? I'd love to hear your thoughts. If you're serious about leveling up as a trader, I highly recommend checking out this video that dives into so many things most of us had no clue about when we first started trading. Don't forget to like, subscribe, and share if you found this video helpful. And until next time, keep learning, stay disciplined, and never stop growing.